Welcome to another video by the Market Maker SA. I hope you guys are doing good. I hope you guys are trading strong. And welcome to a new week. Today is the 13th of October 2025. Before we continue, don't forget to like, comment, and subscribe. And yeah, let us break down how we're gonna tackle the market this week. So today we'll be looking at the five major pairs. Hopefully the five major pairs. Maybe gold and US30. We're gonna look at that today, and maybe we're gonna look at two non-primary pairs and see exactly how we can tackle the market this week. So today, as you can see, we are starting with Euro USD on the H4 currently. And before we continue anyway, obviously we understand exactly where market has been coming from and where market is going. As you can see right now at the moment, market of course completed the three levels to the rise, and the changed the structures, changed the bias and momentum of the market by giving us this peak formation high right here, anchor formation, bit of a type half a Batman or head and shoulders if you will. But anyways, market has been dropping for the past 1, 2, 3, 4 weeks, going into our 5th week right now. And in terms of level count so far, you can see right now to identify that as our peak formation high and our anchor formation. The cycle is not complete. As you can see right now, we currently have level 1, which has been violated. So far we have our first level of drop right now at the moment, and which is very, very interesting, by the way, because of course it indicates to us that the cycle is not complete from a bias point of view. Don't know what is going on there. Do apologize. These things are getting harder and harder to operate, but yeah, as you can see right there, our level 1 right there. So well, let's try and break down exactly what happened here. How the violation happened, and where can we expect the Euro USD to continue. You can see right there what happened is, of course, market gave us that peak formation high we were talking about, that head and shoulders, and then market started dropping, giving us level 1. As you can see, that level 1 got violated as market was coming back, obviously it confirmed to us that market was not reversing because of this a change of character right here, this break of structure right here, this lower low. See what happened right here is market came back to this area right here to take out some liquidity, making that area right there our sell side liquidity. And of course market had to also respect the fact that that structure had been broken, making that a lower low. So after a lower low due to market structure, we expect a lower high. So that was very, very important right there as well. And then see what the market did exactly that. Market followed market structure to the T. After that low market came in there, of course violating the level at the same time, kind of changing the shape of the cycle a bit, but in a way that we can understand. It's not in a confusing way. So what happened here is going on to our H2 to identify the point of interest that triggered the momentum going down. Is market came into this fair value gap right here. Very, very nice stuff. The reason why we don't consider this as a down candle or as an up candle order block or down candle order block is because that wasn't the last candle for momentum. As you can see, the last candle for momentum was this black one right here, and in that instance, when that happens, as we all know, we expect fair value gap. We don't expect market to come back into that order block, because the last candle was not a down candle, an up candle was not an up candle order block, more or less. So what happened there, of course, is market then came into a fair value gap, dropped onto the H1. As you can see, it's right there. As you can see, even on the H1, it's even further confirmed, as the last momentum candle was black indeed before that. So we had 1, 2, 3 inside our fair value gap, covering imbalance right there. Market came in there, gave us first leg, dropped a bit going into that fair value gap right now, going to the upside. People were were thinking that market is reversing. People were ready to trade. People probably traded this. Market came in there, gave us our first leg, second leg, gave us our reset pattern right there. As we know with our BTMM, we know that is our reset. And obviously, right there we expect market to drop. Market to drop to start the cycle. In this moment, as you can see, level 1 was then violated, so there was no level in the cycle at the moment. And but we all know, since we know that market has to drop, market has to drop, or market is going to drop, but we know that it's going to drop in 3 levels and there's no level at the moment. We know that there's room for us to trade, there's room for us to capitalize. And as you can see, market did not disappoint, giving us that break of chakra right here, change of character as well. Or if you consider that being another change of character due to the major point of interest that was taken out there, then splendid. Market dropping, giving us level 1, level 2, level 1. Obviously, that was a full day of drop. Catching that was going to be a bit of a scam, as it started in the night in the Asian session, but on Trade Asia. And you can see a market probably would have given us a break somewhere here, which was going to be very, very tough. The only way we're going to trade that is as a straightaway, which was virtually impossible. Market gave us level 1, level 2. Then market came back. Obviously, while market was giving us level 2, market broke significant structures right there, making that a lower low. Market then came back, retracing back into our point of interest. Since we know that the levels have not been completed on the H4, we already know that this is a retracement move, it's not a reversal. So in this instance, what we expected, well, what anyone would expect in this instance is market coming back to this order block right here. But I was not a fan of that order block right there, and there was this imbalance that had to be filled right here on top, as you can see right there on top. So what happens is, when you look at it from a premium and discount point of view, we can see that market entered into our premium zone. As you can see, 50 going up. Market entered into our premium zone. Market entered into a price that was acceptable to sell. The problem now was about where exactly we want to get that, where exactly where we're gonna identify our point of interest. And I can highly guarantee you that a lot of people plotted this area right here to be, they plotted this area right here to be the point of interest. But as you can see, what happened right there, it did not work. Market took it out, because market came into that area and market plotted a bit there, market played a bit there, market did a lot of things. And in market doing a lot of these things, market actually swayed a lot of people that this was going to go down. Because as you can see, for a specific moment of time, they were happy. They were happy market came into that zone, dropped, showing signs that it's going to go down. But as we know, due to that imbalance being right there on top, I don't see in any way market ignoring that imbalance right there. That imbalance has to be filled, as all gaps in the market have to be filled eventually. So as you can see, this happened. Obviously, the retracement started on a Friday. Well, it started on a Thursday and it continued to the Friday. You see right there, you could have traded the retracement right there, that Duncan order block right there. Very, very nice stuff on the lower time frame, as you can see. But I don't think it was necessary to be that greedy. But if you're people who like trading both sides, both ways, you're trying to capture, you're going to maximize as much profit as possible, then that was the way. That was the way right there. As you can see, if we go right there, you can identify, you can see that was the way. You could have entered right there, first leg, second leg. Thing is, trading that going into the next Fridays when you check it. Personally, I wouldn't do it because I don't trade on Fridays. But exactly, but it would have been a good trade nonetheless. Bit tricky, but even if you caught it early, you still could have made it out alive unless your stop was extremely tight. But irregardless, market came in there, moved away. You would have collected your, I would say average, you see average 40 pips. That's decent. That's decent for a Friday, nonetheless. That's decent. Then see market then obviously took out that area we were talking about in the next Monday, came into that imbalance on the Thursday, making that our midweek reversal. This one was actually quite interesting because market tapped into there the first time. Thing is now, it's about the timing of where market tapped into that area, as you can see right there. Because in this instance, you can see the timing was, it tapped into on a Tuesday being a manipulation day, Tuesday being the manipulation phase of the market, Monday of course being the accumulation. So we already know market did not tap into that area on a Monday. Market then went in there on a Tuesday. Dropped. Now this could have influenced a lot of people's trading decisions, because usually people just wait for market to enter that zone and trade, which is not a bad thing, because we were taught and we were learned that as soon as market enters that area and gives you what is presumably a very good structure, a very good momentum, a very good movement in that area, it's fine. So, an identifiable structure created in that zone, in that point of interest, that is your go ahead to trade. And in this instance, that's what market did. If we go down to our H1 again, see, market gave us a double pin there information. Thing is, was it the right move due to the timing? No. But here's the thing, when it comes to forex, people like to risk it all. I think if people still take that whole gambler's approach to forex, that whole if you're not a risker, then you won't succeed in life. If you don't risk, you won't succeed in life, which is true to some degree. Mara, in here we need to remember we are dealing with something as delicate as money. So in this instance, we have to be super surgical. If market had done that movement on a Thursday, on a Wednesday or Thursday, that'd be our middle reversal, or in our distribution phase. In our distribution phases, that being Wednesday, Thursday, Friday, then and you still lose the trade, then it's okay. It's okay. You take the you move on. Take the you move on. That's risk management. But in this instance, it was super necessary for you to trade. That being on a Tuesday. Personally, I don't trade Tuesdays. I think Tuesdays are a graveyard side for traders in terms of profit being lost. You have to be very persistent. It's either you're very persistent or you're very lucky to make money on a Tuesday. Yeah. So in this instance, market came into that Tuesday, gave us what we needed, dropped. People were happy for 1, 2, 3, 4, 5, 6 hours, 7, 8. You would even consider 8 hours. Some logical people, some people who were satisfied with their profits at that time probably left the trade and they were not disappointed. But the next day they were probably gonna be disappointed slightly, even if they made money or not. Even if they made money, they were gonna be disappointed slightly that the market didn't go to the bias that they intended to. But most traders are perfectionists, out there. Especially people who've been analyzing these, looking at these charts for time, and time again. They are perfectionists. But anyways, in this instance, what then happens is market came into there, market dropped, did that a whole consolidation move, or that consolidation sideways movement. And then when market then shoot it up to the sky the next day on the Wednesday. Market shoot it up in the morning nonetheless, in that night nonetheless, or in the morning nonetheless. 4, 5, 6. Moment you woke up and you were holding that trade, you were taken out. It's either you were taken out or you traded irresponsibly, but your irresponsible decision paid off as you were not taken out and market eventually turned to the right direction. So obviously a newbie trader would have traded this, taken out, and then saw market going to the right direction. They would not be discouraged to leave the markets. That's what market makers do. Very smart, intelligent people. But you see what market did. Market came into that area finally again. Kind of because of this happening, raising questions if the market is, what am I looking for? Still fresh. Still, I'm looking forward. But yeah, I can't find it. But anyways, if the point of interest is still fresh, if the point of interest is still sustainable to some extent. So then what happened here is market came in there, gave us our first leg, second leg, that accumulating throughout majority of the day probably. Then market came back for the throughout majority of the day. Then market gave us that first, second, market dropped, then consolidated slightly back, as you can see right there. But by the time you had identified the market is taking its time slowly throughout the middle reversal, you know that this is a good trade. Market comes back slightly. I mean, now it does depend. In terms of you being taken out, just depends really necessarily on how you traded. The timing. Because if you entered there and then you put your stop loss there, you were getting taken out, So to some degree, you could have just waited Wednesday out, or you could have traded it from the top. But that was the only way you're gonna succeed in any way, shape, or form here. Market rises, they give us our third hit, and we all know, we all been taught by Steve Mario that if the market comes back for a third time on on a big formation high to give you a third leg. Market is not coming back. You have to take that trade. And see, market dropped very nicely, breaking very significant structures right there. That big break of structure right there, low. Very significant structures. But then market coming back again. This is where the confusion started happening. Market coming back again. I mean, this instance, if you have dropped and you had your take profits there on the break of structure, which is the most logical thing to do, you will find market came back again, retraced back, for Thursday and Friday, and then market kind of stalled, ending the week stalling. Then the next week, straight on the Monday, market dropped, creating the gap. Market came through the gap. I saw this, but the thing is, what I did is I didn't trade this one. I traded the gap that was on GBP USD, which in my opinion I kind of regret now that looking at it, because I timed it badly there. But I can see what then happened here. Market then dropped very nicely, dropping, retracing, then dropping finally nicely, giving us level 1 consolidation. That should have been level 2 market violation, making a consolidation, level 2. And now we are in the present day where we have level 2. We can see market right now is dilly-dallying a bit. We know market is still dropping for one more level to the drop. Now it's just about getting the right point of interest. Thing is, now it's a bit tough, I'm not gonna lie. As you see, market right now market is in a retracement phase. Market is in a retracement phase on a Monday, by the way. Thing is, how's market gonna approach this? You can see right there what I would love market to do. I'm not saying I would, as someone who doesn't trade both ways, but we can see on the H2 right there, we already have a fair value gap right there. It's been taken, already been filled in. I don't know about trading it. It's a bit of a scam, because you can see if you go to the H4, the gap has been filled. It shows the gap is not being respected. However, we do have this order block right here on the H4, which is the only viable, really is the only viable thing to look at, because market has nowhere else to go. Closely, there is no imbalance that needs to be filled. I guess if you think of it from some perspective, the only imbalance that has to be filled is right here. But do we really see market dropping to that area? Market dropping to that area. Going to that area. Market going to that area in the phase that is in right now, where now it's in a rush to complete the cycle due to so much manipulation. I don't know, but so far there's nothing concrete. But because you can see right now, if you drop to M15, it's a bit of a scam to even think about trading that. You're more likely to trade it to the upside, so it'll be quite interesting necessarily. But if market drops from this area, I really wouldn't be surprised. Really wouldn't be surprised. But in terms of discount and premium zone, as you can see right there, it's a bit 50-50. You see right there, not necessarily 50-50. Market just got there and just tapped it on the premium, but we'll see what will happen. There's nothing, no distinct thing. Is it's too risky right now to come up with a bias, which is what I'm not gonna do right now. It's always come with a bias. I don't want to mislead people. You know, market could drop here, or market could rise right here after feeling this imbalance. You know, possibly anything could happen. So I would just look at a Euro USD, look at it. If it rises, goes into that imbalance, splendid stuff. That's good for us. But if it doesn't, it doesn't. Move on. Go to our GBP USD. Now I'm going to try to be quick with this, because I realize we spend so much time, but we always spend a lot of time on the first pair. GBP USD did its thing right there. As you can see, it was plotted a long time ago. First leg, second leg. That taking probably three months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, almost 3 months. Right, crazy. But market finally dropping reverse level 1. Drop level 2. The level 2 got violated. You can see there, I already plotted it. I was already thinking about it. And the gap I was talking about, that when I said I chose the wrong gap to trade this, was right here. Chose the wrong gap. Let me just fix it right there. Chose the wrong gap right there. Traded there. Got taken out. My stop loss got taken out. The market dropped. Continuing, which was quite foolish for me, but we learn from our mistakes and we move on. It's that simple. Didn't lose a lot of money. Market, as you see, we identify market is in level 1 so far, going to level 2. brilliant fair value gap right there. Very, very, very nice stuff. That stuff that those are things that you put your house on the H4 fair value gap like that. Can't fail. As you can see, broke significant structures that move, or the move prior to the fair value gap being filled. Broke significant structures, you can see right there, great stuff. Market dropping off that fair value gap, giving us our level 2. So now we're in level 2. Has not been what's what am I looking for? Has not been taken now. Market has not violated at level 2. We're in level 2. Very interesting stuff. Way okay. Very, very interesting stuff for one. Consolidation 2, and now we are here in this instance in this area, which is quite interesting, but not necessarily interesting, because there's no point of interest for market to work on here. The most viable one would have been this one, but you see market didn't respect it. Great thing for us, we now know that a fair value gap is not valid right now at the moment. So the only point of interest I see is right here, this order block right here. It's a bit of a scammer. It's a bit of a scammer, but it's right here. So you see, if we go to the H2, yeah, go to H2, go to the H1. Is there anything right there? Nope. Great stuff. So expect market to come to the right area. In this instance, then we would expect market to use this fair value gap right here on the H2 and use it as a springboard and continue the trade and continue moving to the top. So quite interesting right here on the H1. There's that huge ass order block right there. So quite interesting right there. But we expect market to go into that area, giving us one more drop. So very, very interesting. GBP/USD, we'll see how it will work out during the week. But we expect it to rise there and then drop, breaking those significant structures and continuing to break those other structures. Go down to USD CAD, USD Euro. USD CAD. Break. We had as you can see right there, that being our anchor formation right there, peak formation low, level 1, big consolidation there. Consolidation took first of all, consolidation with a lot of manipulation right now. A lot, I'm not gonna lie. So you see, we were there. We experienced it all. We traded, we were buying, buys, sells even. It was a lot. But we made it out alive. You can see right there. But market is finally moving. Level 1, consolidation. Level 2 finally being moved out. Level 2, and now we're waiting for level 3. Level 2 right now is not necessarily completed because 1, 2, that 3 got violated. Then market consolidated, finally giving us the 3. So yeah, if you actually think about it, not really not really a lot for you to hop into the market right now on the Monday. So quite interesting, but there's a lot of imbalance that needs to be filled. Sadly, there is no point of interest, viable pick formation there for us to look at. So the only thing we can necessarily work on right now is this whole entire mitigation block right there, where market coming in and then dropping out, and market dropping in there, then rising up from there, taking out significant structures, and finally completing the cycle. And then if we go down to USD JPY, same thing right there, anchor formation, loads of manipulation, market finally starting after 4 months, after 3-4 months, giving us level 1, another form of manipulation, market finally rising. This one is much more simpler though, as we have a simplistic point of interest right there. There's our down candle order block right there, that being a point of interest due to that area breaking significant structures. See right there, structure 1, structure 2, making all that our lower highs, our higher highs, high broken, high broken. And you see market currently right now is currently dropping to the area, then rising up. So if you don't people who are trading both sides, it'll be quite interesting. We have as you can see right there, big formation high on the H1, big formation high, break of structure there confirmed. Market is break of structure confirming the lower low. Market is already coming back for the lower high, and as we can see right there, going down to H2 to further confirm exactly what are we looking for right there. We could already identify that there is no down candle. Oh, there is. Okay, down candle order block right there on the H4. I mean up candle order block on the H4. Let me just do that. Up candle order block, drop down to our H1. We okay, not H1, H2. We have our fair value gap that is in our down up candle order block right there, going down to the H1 on the M15. Very nice stuff. This is a trade to take. I would definitely take this right now. Take it right there twice, dropping obviously to the area that we expect market to come back to. Well, not yeah, because it's all about risk to reward. So no, just make it safe to make it a guaranteed take. Put it right there. Take 1:3. Take profit. Put a take profit of $10. I mean a stop loss of $10. Right there. Simplistic stuff. If market comes back and tries to violate, to manipulate up, the loss will be quite small. But in terms of M15, just a simplistic trade, all the things are in the right movement. So yeah, very interesting. We will see how it will play out. Crazy that we did a live execution, but trades like this, it's just too good to miss out. Two structures being broken. Down order block on the H4 necessarily. See dropping down. It's just nice stuff. So we'll see how market plays out right there. Then we'll look at gold, and then I think we'll stop it right there. We'll stop it right there. Gold and USDT. And gold has been doing what gold done. Donald Trump has completely filled this pair with toxicity. It's just been upwards movement, which is a great thing to some degree. Just press buy and then you just wait, literally. But yeah, man, I've just not been happy with gold this year. It's been responsible. First of all, a lot of money has been lost in gold due to Trump manipulating it so bad and changing the US, just changing the course of how gold works. But yeah, all I'm gonna say with gold is just buy up, literally buy up. In terms of dropping and fight and looking for a proper point, point of interest. We have that break of structure right there, as we can see. Thing is, with gold, the points of interest are a bit of a scam because gold doesn't care about premium or discount. That's how strong it is. It doesn't really care about that. It doesn't really care how many people are in it, how many people are trading it. It doesn't trade off orders. Hold on to M15 to look for a better point of interest. You can see right now we just see chop, H4, chop. But we do see that base rally right there, hidden base area. We expect market to come to that area, settle in there, then move away. Probably hitting even further highs. So yeah, Aussie USD going down, splendid stuff. Level 1 consolidated, level 2. Market is now retracing. This one is much easier if you think about it. Break of structures right there, confirming the lower low, confirming why market is retracing back. And as we can see right there, we have this blended up candle order block right there. Great stuff. Cannot complain right there. Bit of a tap in. Just wait for market to come into that area and trade away. Bit of a tap in, but yeah, it's great stuff. That will probably take probably it'll happen on a Wednesday, hopefully. But you can see right there in terms of trading both sides. We already have breaker structures right there. Very nice stuff, because we know it's gonna fill the imbalance that is on the left right now, and we currently see at the moment, which is this imbalance right here on the side. See what market is gonna do there. Very nice stuff. We already have an accumulation. Hopefully we would like market to manipulate into this area until New York session. New York session, market manipulating that area and moves away, taking out those structures and coming into there and moving away. So great stuff right there too. But nice stuff so far. You can see we've been plotting on it, and as you see, it does have, I wouldn't say a history of entering a little order blocks, but major points of interest it loves. So yeah, GBP JPY going down as well. kind of following both of its counterparts. So in some way, it's, I guess in some way you could say it's working. Hey, it's doing its thing if you think about it. Mitigation block right there. Very, very interesting there. Very, very interesting. Yeah, guys, and that's basically how we're gonna approach the market this week. Quite standard stuff, nothing crazy. US 30. US 30 finally breaking significant structures after long upwards movement. Finally breaking significant structures, change of character right there. Great stuff. Peak formation high, even greater stuff right there. First leg, second leg, great stuff. Market is already dropping level 1. Expect market to cover this imbalance right here, give us level 2 and then level 3. So that too. So yeah, guys, thank you guys for watching. Don't forget to like, comment, and subscribe. Hit the notification bell icon to be notified in case we drop another video. We'll be dropping much more frequently. We'll probably do a trade review on the trade that we took on USD JPY. We'll definitely do a trade review. But yeah, guys, thank you guys for watching. Don't forget to like, comment, and subscribe. Hit that notification bell icon to be notified in case we drop another video. Yeah, on to the next, guys. Goodbye.